It's now 4 in a row. The Dow and the S&P fell again today, backing away from last week's record-setting highs. Blame it on a new batch of positive reports on jobs, housing, and the Fed's upbeat Beige Book survey on the economy. The takeaway for investors: the Fed will soon begin tapering back its stimulus plans, and that might not be good for the markets. Now, all this comes just 2 days before the release of the monthly jobs report, a key data point for central bank policymakers. So it's no wonder stock averages seesawed all day between gains and losses, and finally ending mostly in the red for the day. The Dow lost 25 points, but was down as much as 125 earlier in the day. The Nasdaq edged up only a fraction, and the S&P fell 2 points. And those same concerns about the Fed's next move sent the yield on the benchmark 10-year Treasury note above 2.8%. That's the highest since September.
So how does the Federal Reserve see the economy right now as it prepares for its next policy meeting later this month? Steve Liesman takes a look now at the bank's latest Beige Book survey of economic conditions around the country and what that, along with this Friday's November jobs report, could mean for the future of its stimulus program.
Some strong employment data today, raising prospects for better job growth, but also raising fears in the market of less Fed stimulus. The private payroll company ADP, in a much followed monthly report, forecast that payrolls in November rose by a strong 215,000 in the private sector, far above estimates of Wall Street economists. What's more, ADP revised upward the October report by 54,000 to 184,000 jobs. Now, ADP is only an indication of the more important government report on payrolls that comes out this Friday. But if 2 months of strong job growth are confirmed, it could raise hopes for a green Christmas for retailers. More people working usually means more spending on holiday gifts. The Federal Reserve reported in its Beige Book today, that's the collection of economic anecdotes from the 12 Federal Reserve districts around the country, that retailers were hopeful but cautious ahead of the holiday shopping season. Now, strong job growth would also indicate that employers looked through the 16-day government shutdown and hired anyway. That suggests underlying economic strength despite the fiscal fisticuffs in Washington. On the downside, the Fed is looking for sustained gains in employment as a condition for reducing the amount of stimulus in the economy. If Friday's jobs report shows strong payroll growth and lower unemployment, it will raise market fears that the Fed could cut back on its bond purchases designed to lower interest rates. The market will then have to judge whether stocks still look attractive with more Americans working but less stimulus from the Federal Reserve. For Nightly Business Report, I'm Steve Liesman.